So you've decided to buy your first home, and now it's time to understand all of the steps involved to help you on your way. To pull all of this together, you're going to need to get your team sorted. And the first team member is your mortgage broker. And the mortgage broker helps you out with everything to do with finance and structure, borrowing capacity, and working with the banks to make sure that you get your loan approved. Your next team member is a really good conveyancer. And these guys are important to help you do the legal side of the transaction. They make sure that the property is fit for transfer, meaning that there's no caveats or restrictions on the property that you're about to purchase. So you'll get them to go through the contracts before you put in an offer on a property. They'll also make sure the transfer is made correctly into your name, and the existing owner, the vendor, is paid the right amount, and any government fees and charges are also paid. So a conveyancer is crucial in helping to complete the transaction. Another team member that we've got is a building and pest inspector. So you'll employ these guys when you're looking to put in an offer on a property, but potentially you want to put the offer in subject to a building and/or pest inspection. Their job is to go through the property and make sure that it's structurally sound, meets all the building codes, or in the case of a pest inspector, make sure that we haven't got any termites or possums that are residing in the property. So the next team member is the real estate agent, and they're going to be the party that actually sells you the property. As a first home buyer, most parties represent themselves throughout the negotiating process. So it's important to realize that the real estate agent is actually working for the seller, trying to get the best possible price they can. Now you can choose to get representation through a buyer's agent, but that's an added cost. So a quick summary of what all these team members are going to cost you. Firstly, the mortgage broker should be complimentary. Their fees are going to be covered by the bank in terms of getting a commission from whichever lender you choose. Your conveyancer is probably going to be $1,500 to $2,000 to help with all those legal side of things. And then if you choose to have a buyer's agent, you're possibly looking at a fee of up to $15,000, depending on how involved they're going to be in the transaction. So the first step is to select your mortgage broker. And once you sit down with them and have a detailed conversation, your broker should be able to understand exactly what your needs are and what lenders are going to be available. They'll be able to work out what your borrowing capacity is, what the rates are that you're going to get charged, and ultimately what your monthly repayment is going to be. This is really important in understanding what type of property you might be looking to purchase and also what area, because if you can't make the repayments, you might need to adjust your budget. When you're sitting down talking with your mortgage broker, they're also going to go through schemes and programs that are available for assistance provided by the Australian government. So currently one of the ones that's just been tweaked a little bit is the Australian government 5% deposit scheme, which basically allows you to purchase with as little as 5% deposit without having to pay lender's mortgage insurance. So you'll have to come up with 5% of the purchase price plus any associated costs, but ultimately you can borrow 95% of the value of your property. So this Australian government 5% deposit scheme has had a few different name changes over the years. It used to be the First Home Guarantee, but essentially now what it is it's still the same scheme, but just with some higher thresholds and limits. In Victoria, for instance, you can purchase to up to $950,000, and that's in metropolitan Melbourne. Another change just recently is there's no income threshold cap, whereas previously there was. So now a couple on any form of income and any amount of income can apply under this scheme and you're eligible to go. Within the scheme too, there's only a handful of lenders that are available and have got allocations approved by the government. So your selection of lenders is going to be a little bit reduced if you choose to go under this scheme. But rest assured, they're all still government-backed banking and financial institutions within Australia, so they're completely safe. So working with your mortgage broker as you progress through the process, your broker is going to provide you with a number of options based on what your preferences are and your eligibility. These are going to be based on whether or not you're looking at the scheme, what your capacity is and what your deposit is, and what your overall objectives are when you're purchasing your property, and even your long-term goals for that property. So you should have a handful or even 2 or 3 lenders available to you that you can make the choice for to then proceed with an application and seek a pre-approval. So a pre-approval is when the bank take an application from yourself and they assess you without having to purchase a property just yet. They look at aspects of the application, including your credit history, your income, your savings, your credit report, your residential history as well. They look at all of the different aspects that make up a credit application and they'll give you the tick of approval. They're approving you to borrow an amount of money. However, they haven't got yet the property in mind. So any pre-approval will be subject to purchasing a satisfactory property and the bank going out and doing a valuation. And by satisfactory property, most of the banks have requirements in terms of You can't purchase a full amount of acreage or a tiny little studio apartment, but anything in between should be completely fine. Pre-approvals are valid for 90 days in most cases, and if you need to extend those, it's as simple as signing a declaration that your personal circumstances haven't changed and updating the lender with a payslip and maybe a savings statement. In terms of a time frame and how long will all of this process take, well, it almost depends on how quickly you need it to take and how motivated you are. If you've got an auction on the weekend, it's going to be different to someone who's planning to make a purchase in the next few months. But as an overall picture, once you have a meeting with your mortgage broker, it should take 24 to 48 hours for a number of scenarios to come back. From there, there'll be a gathering of information process where you'll be required to complete a fact find document and provide additional information such as pay slips, savings statements, and maybe even identification. Once your broker's got all of that, we can merge that into an application form, send them over to yourself for signing, and banks allow DocuSign these days, so it's all electronic and very, very quick. And then we would lodge the application off to a bank. Now, depending on which bank you choose, depends on how quickly their assessment process is, but most banks are around about the 3 to 4 day mark at the moment. So potentially you're looking at meeting with a broker and then having a pre-approval in a week's time. But as I said, if you're looking to save a little bit extra and you're not looking to get into the market for a couple of months, the process can be slowed down a little bit. And you're probably wondering, when do I need to reach out to a conveyancer and engage in their services? The answer is that you should be doing this as soon as you're ready to start looking at properties. That way, if you do find a property and you wanted to make an offer, when you get the contract from the real estate agent, you can give that to the conveyancer to have a look over and make sure that everything is aligned and that there's no hidden secrets within the contract. Now, this is an important part of the conveyancer's job to make sure that you're not purchasing a lemon. So you found the property and you want to make an offer. Now, there's a couple of different ways that a real estate agent are going to sell properties. So depending on which method they've chosen is going to depend on your game plan. If it's via an auction, what you're going to need to do is turn up to the auction and start bidding. Now, this is an open forum generally at the property, and basically it goes to the person that's made the highest offer. Purchases on auction conditions are unconditional, meaning you don't have the ability to put down a clause subject to finance or subject to a building and pest inspection. So you need to make sure that these are sorted prior to bidding at auction. Any sort of inspections are going to come at your own cost. The other sales method is via negotiation, or what the real estate agents call a private sale. This is a situation where you'll sit down with a real estate agent and potentially there'll be competition. You'll be asked to put in your best offer and you may then have a chance to up that depending on how the real estate agents operate. The real estate agent's going to ask you for a number of conditions. The first one is the actual purchase price, how much you're willing to pay for the property. On top of that, they're going to ask you how much of a deposit are you prepared to pay, and they will ask for 10%, but you can negotiate this depending on what you've got in your savings. They'll also ask whether or not you're subject to any conditions, and it's these ones that are really important to protect you in case something happens throughout the transaction. The first one is subject to finance, and this is going to protect you in case you can't get the finance. The second one is subject to a building and pest inspection, and this is going to protect you in case you've got extra critters or creatures that are living in the property that you clearly don't want, or perhaps the property is falling down and not safe to live in. So it's important that if you do put down those conditions, make sure you get an inspector to come to the property straight away. Having these conditions though are going to weaken your offer. The last one is your settlement terms, in which case you'll have 2 dates. One of them will be subject to finance or your building and pest conditions being met. So that's the first date that you'll have as a deadline. The second one is your settlement date. That's the date where the loan finally gets drawn down, the seller gets paid their money, and you get to pick up the keys from the real estate agent. Once your offer is accepted, what are my next steps? So depending on whether or not you put any conditions down, you may need to pay the deposit straight away. Alternatively, it'll be a case of waiting until your conditions are met. And once it's time to pay the deposit, you transfer that to the real estate agent's trust account. So once you purchase your property via either a private sale or at auction, what are the next steps? Well, basically you need to get the contract to your mortgage broker as soon as possible, and they're going to then finalize the approval for you. What is going to happen is that they'll submit the application to the bank, potentially with a valuation report and any outstanding conditions from your pre-approval. The bank will then complete their final checks and balances and give you what's called a formal approval. This is the bank giving you an absolute and ultimate approval that they have approved the loan for you and that you can continue with your purchase. Shortly after, solicitors will be instructed. that's the bank solicitors, and mortgage documents will be issued. It's important to read over the mortgage documents and make sure that you understand exactly what you're signing, and if so, you can obtain legal advice to help you to clarify any issues that you've got. Once you sign the documents, the bank will need a certificate of building insurance as well. Now, this is the building insurance that covers the property in the event of fire and other insured events. And once the bank has that document, then we're ready to go for settlement. A week before settlement, you'll have the opportunity to do your final inspection. Now, this is your chance to make sure that the property is in exactly the same order as when you purchased it. It's really important to understand that you need to look at every single thing in detail, because this is your last opportunity to raise any concerns that you have and potentially get them fixed. It's at this stage as well, you're going to need to transfer your savings over to your conveyancer or to the bank in readiness for settlement. And then on settlement day, your conveyancer is your legal representative. They're going to make sure that the loan is funded, the seller is paid, the title is transferred to your name, and everything is ticked off and completed. So it's settlement day and you shouldn't have to do anything. Your conveyancer's got this process covered. Upon completion of the transaction, your conveyancer is going to reach out to all the parties involved and let them know that settlement has taken place. And you should then be able to catch up with the real estate agent to collect your keys and move in. So now that we understand the formula and the process for buying your first home, let's have a look at some of the hacks. Hack number one, if you haven't got a big enough savings, what you can do is look at either the government schemes or asking mum and dad for a guarantor. And essentially what happens with a guarantor is that mum and dad will offer their property to the bank as additional security, and that then allows the bank to lend you up to 100%, or in some cases a little bit more, of your purchase price, so you can borrow without having a full deposit. So hack number two could be to purchase this property as an investment. Purchase it, settle on the property, get some tenants in, and whilst you're still living at home with mum and dad, make those extra repayments, build up the equity and let the market do its work. So as the property goes up in value, not only have you got your tenants paying off the loan, but you are as well. And in that instance, you're generating some equity. So then you can move in down the track with a lower mortgage. And hack number three is to look at ways to increase your borrowing capacity. This could be done in a couple of different ways. The first one could be to reduce your current commitments. So if you've got store cards or credit cards laying around that you haven't used, best to close them off. And the reason for this is that banks will consider those as open facilities and apportion part of your income as a repayment. So if they're no longer there, you've got more money to put towards a mortgage repayment. Or the other part could be to get yourself a part-time job. Working an extra day a week will increase your income and therefore increase your borrowing capacity and allow you to borrow just a little bit more to help you into the property that you want to purchase. So there you have it. That's the ultimate guide to buying your first home this year. If you've got any questions or you need a hand with your mortgage, make sure you reach out. I'd love to assist.